This is the Savvy Investor radio show and podcast with Mike Kinnett and Ryan Herbert of ProStatus Financial, now celebrating 20 years helping families build successful retirements and lasting family legacies. Mike is a financial planner and estate planning attorney with a master's degree in tax and 4-time Amazon best-selling author. Ryan is a 5-star Wealth Management Award winner and top-ranked financial advisor by Forbes. Now, the Savvy Investor radio show and podcast.
The stock market seems to be coming to grips with the Fed starting to cut interest rates now. Economist Brian Jacobson, I want to play this for you. He was on Fox Business. And if the Fed will keep cutting rates by 50 basis points or slide back, here's his response to that. And then I want to get yours. Listen to this.
You know, I think I am warming up to the idea that they might do another jumbo cut. If you kind of think about the balance of data that we're going to get between now and when they meet next, we get one more inflation report, and then we get 2 more job market reports as far as the employment situation report. I think we're going to see a little bit more cooling of the labor market, which might tilt them more towards a 50 basis point cut as opposed to a 25.
All right. So, Mike, what should they do in your opinion? Should they take it slow? Should the Fed take it slow or be more aggressive? We know that if they take it slow, it's going to be less disruptive with the economy. And if they go fast, it's going to be more disruptive to the economy. And then you got an election that's happening too.
I think the election is the biggest, problem that we have coming up. And it's not just the election, the Fed raising interest rates. We can come back to that in a second, but we have the election coming up, and at the risk of alienating somebody, if Trump wins, there's going to be chaos. And if Trump loses, there's going to be chaos. So from our perspective, we're worried about the chaos that comes up. So obviously, we're taking a little bit more defensive posture as we enter into the election. But, basically 8 weeks later, we have, Congress has punted the debt ceiling thing, the debt ceiling issue from basically this last month. They had to fix it in September. They postponed it to December, and they're going to have to address that again. And so we have a lot of concerns coming into the end of the year. And I think if the Federal Reserve is paying attention to that all, in theory, their mandate is, unemployment, inflation. And even though inflation is in check, there's still this emotional thing about the prices haven't come back down. Well, right. I'm here to tell you, folks, prices never go back down. That just doesn't happen. It just doesn't. Once the companies have locked in their profit margins, they've locked in their profit margins. And corporate America has huge profits right now. So it's working well for them. Even if emotionally, personally, it's impacting me adversely, prices aren't going back down. Having said that, inflation is in check. And that's really where we want to be. And so first and foremost, as we're getting into this election and as we're getting to the debt ceiling, if you have concerns about how those two issues are going to impact your retirement accounts, how they're going to impact your income streams, how the Fed is going to impact your income stream, pick up the phone and give us a call at 866-597-1040, 866-597-1040. Sit down with Ryan and myself on our team, and we'll show you how to create income streams that, quite frankly, don't care whether interest rates go up or down, and quite frankly, don't even care about elections. It's just steady and secure and safe. That's one way to create an income stream that you never outlive. And we're going to talk to you about how much risk you're taking, and we're going to talk to you about the fees you're paying, long-term estate planning. And taxes are a big issue, right? Because we know whoever wins this election is going to have a profound impact on what happens in 2026 and further and beyond on what's going to actually happen to your tax rate. So to me, even though we've talked about the Fed, and I know I'm supposed to do this, Michael, I apologize. Give us a call at 866-597-1040. There you go, folks. See, the true professional, he's yelling at me to make sure I throw that number out there. But to me, the true impact of the Fed is also going to be how much they take into account the potential chaos that we're going to see and the debt ceiling issue. I know the Fed wants a soft landing, and in my opinion, I think we got a fairly soft landing. We didn't wind up in a recession. The stock market, notwithstanding 2022, has been steady. It's not been too crazy. I would be really happy if they did a 0.25 point drop in interest rates. I think a half a point would do well for the housing market, and certainly we would like to see rates come down for them. I do think that this idea that interest rates are supposed to be 3 and 4, 2, 3, 4% forever. That's the exception to the rule. It hasn't been the norm, but it would be nice if first-time home buyers could get interest rates in the 5% range. It would be much. It would open up the housing market a little bit more, which I think is good for the overall economy. Dropping a quarter point, I think, helps people who currently own bonds, and we're not big bond proponents because we don't like the fluctuation of interest and stuff. But if you are a bond holder, or if you're thinking about where to invest right now because of the potential of Fed lowering interest rates, obviously you want to check the duration of your bonds and make sure you're not buying too late. Mm-hmm. But bonds are actually a viable place to be, because as interest rates go down, your current bond holdings go up in value. So that could be a place to land in the near term. Obviously we like a little bit more security from what's deemed fixed income, right? People buy bonds for the safety feature of them, but unfortunately 80% of the time, roughly, the stock market outperforms the bond market, and bonds are very volatile, subject to interest rates. And if you think about this, there are a lot of economists out there that are concerned about next year having some inflationary pressures pop in, again, depending on who's elected president and what happens to the budget there, and how much, both of these, I'm going to call them clowns, are promising the sky when it comes to lower tax rates. But none of them have really talked about how they're going to cut the deficit and cut spending while they're lowering these tax brackets. And as the deficit goes up, that has a ripple effect. So at the end of the day, what I would say is that we try to stay away from the noise, right? Because really this whole thing about interest rates is part of the noise that's out there. The election, even though it has a profound impact on us, it's noise when it comes to the stock market, especially your retirement side of things. When we're watching the financial news, it's constantly talking heads. And when the market goes up 50% one day, they tell us why. And the next day, when the market goes down 50%, they tell us something different. And how can it be that the market was so good on Monday, but so bad on Tuesday? It doesn't make sense. So basically what they're doing is they're filling the airwaves with noise, explaining to you these gyrations that nobody truly has their hands and can get their arms around this whole thing. So for us, we think the best thing to do is, to pick up the phone and give us a call at 866-597-1040, 866-597-1040, and sit down with Ryan, myself, and our team. And we will show you how to create income streams that you'll never outlive. Now, you could choose to absorb risk, or you can choose to offload the risk, but you get a choice. And if you don't have a conversation with somebody like us, you don't know that you have a choice. We're going to talk to you about how much you're paying in fees. And even if you're paying fees, for example, the way we trade, we have a unique trading system, and it's not like I came up with it on our own, but we did our due diligence and researched it, and we're saving on average about 0.3% on every trade that we do, which over time saves you a bunch of money. So we're going to talk to you about the fees you're paying, and trading costs and the cost of the individual positions that you own are part of your expenses, even though you may not think about it, which is part of the reason why we don't particularly appreciate mutual funds. We're going to talk to you about how much risk you're taking. Talk about interest rates being a concern. Talk about the elections being a concern, the debt ceiling being a concern. If those things are concerns with you, let's take that risk off the table. Why are you even exposed to that in the first place? The market drops on average about 40% every 7 years. Why would you be in that position? So we're going to talk about that with you. We're going to talk about estate planning, tax planning. When it all is said and done, we're going to have a comprehensive plan that basically sets you on the road to retirement in such a fashion that you don't really have to worry about all the gyrations and the talking heads and all the noise that comes out there. And it all starts by picking up the phone and giving us a call at 866-597-1040, 866-597-1040.
Advisory services offered through ProStatus Financial Advisors Group, a registered investment advisor. Insurance licensed in Maryland. ProStatus Financial Advisors Group, LLC is not licensed in all 50 states. To find out if ProStatus Financial Advisors Group is licensed in your state, please call 410-863-1040. ProStatus Group, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided provided with information about insurance and annuity products offered through representatives of ProStatus Financial Advisors Group.